Welcome to the Agent of Wealth podcast with Marc Bautis from Bautis Financial. In this podcast, Marc helps guide you towards financial freedom, ensure you never run out of money, and create a balance in life that prioritizes what is most important to you. Join us for this journey as Marc draws from years of expertise and guest experts to solve the multiple wealth building challenges involved in your financial life.
Welcome back to the Agent of Wealth. This is your host, Marc Bautis. Today's episode is dedicated entirely to precious metals, what they are, what they're not, and where they fit in a modern financial plan. Gold and silver have served as stores of value for thousands of years, yet they're often misunderstood, misused, or ignored altogether. To help us separate signal from noise, I'm joined by guest David Morgan today. David is a precious metals analyst and monetary system critic with over 4 decades of experience. David's the author of the Silver Manifesto, publisher of the Morgan Report, and now creator of the upcoming documentary Silver Sunrise. With insight grounded in monetary history and hard-won market experience, David's here to unpack money, markets, and mining. David, welcome to the show.
Mark, thanks for having me.
So I'm excited to talk about precious metals today. I think, the timing couldn't be any better with what's gone on recently over the past year, a couple of years. I'm sure listeners will have a lot to gain with our conversation. You're one of the world's most trusted voices on precious metals. What brought you to really study or become an expert in this area?
Yeah, it's a great question. I've answered it often. The truth of the matter is I was 11 years old when the coinage changed. And my dad used to deposit 25 cents in my hand, 25 cents allowance, and I earned it. I had to water the orchard, which was 1 acre of trees. And, when you're 10, 11 years old, it seems like an hour or two behind a hose seems like forever. But the coin has changed, and I thought, this is weird. This new coin can't be as valuable as a silver coin. But no one around me seemed to be paying any attention. So I think that might have been a spark. I don't know. I'll make a big deal out of it. But I was fascinated about money. Started trading stocks when I was 16, asking my dad to get me under the 18 age limit. California said if you parents say it's okay, you can. So start trading stocks at 16. Wanted to go in finance. My dad was against it. I started a different career, but I was always interested in finance. And I studied on my own about monetary history. What happens? What happens when banks make the money and it doesn't have any value behind it? So I got very interested in what's called the Austrian School of Economics. Studied that on my own. As my life progressed, I went back to school, got a second degree in finance. My first degree was in engineering. And I lost my career, you could say, in the aircraft industry and moved into finance. I've been there ever since. And I really wanted to be a newsletter writer because I had read so many and been to so many investment conferences. And these men and women were very astute about the real economy, I'll call it, maybe a different viewpoint. And so I had the opportunity when the internet started that it wasn't a lot of money to start that business because it could be done electronically. And here I am 25 years later talking to you.
Maybe you can give us a little bit of background on what's happened with precious metals over the past 6 months, year, couple of years. I think, everyone gets blasted by what they're hearing with the stock market or this or that. Sometimes what's going on in the precious metals market, particularly gold and silver, goes under the radar. But there's been a lot of activity, a lot of movement with it recently.
I'm going to broaden the frame, Mark, and thanks for the question. I mean, the subset of the Morgan Report is money, metals, and mining. Money affects everyone. I mean, everyone's concerned about their money, no matter, what nationality you are, what religious beliefs you have, what, team you root for. Everyone's concerned about their money. So the bigger picture for me is we are in a situation that is not just another cycle. This is a confidence shift in money, institutions, and promises. So we're not at what many of my peer groups say, a currency change that happens every 50, 60 years, which is true. That's the general rule of thumb. I think we're in a huge shift that happens about every 300 or 400 years. And that has a lot to do with unsound money on a worldwide basis. Every time there's been a fiat collapse in the past, it's been the Weimar Republic, Argentina, the Italian lira. I mean, there's all kinds of currency collapses, but it's in a given country. You could escape by having the next country over its currency. or perhaps precious metals or real estate or something. But at this time, the U.S. dollar is the reserve currency of the world, as we all know. And if the dollar goes down, I think everything is going to go down. Doesn't mean the end of the world. Doesn't mean things stop. It does mean a realignment of, let's say, repricing everything. Real estate gets repriced. Stocks gets repriced. Precious metals get repriced. And normally after that huge shift or reset, the overused word, there is a build back into a more realistic value system that people appreciate more than when we hit the last Great Depression with the Roaring '20s.
What would, let's say that the U.S. dollar does go down, what could lead to triggering that happening?
Well, the precious metals are usually more of a barometer than a thermometer. And so if you're a sailor or a pilot and you look at the barometer and you see that the weather is drastically changing ahead, you may change your plans. You may not make that flight. You may cancel your voyage. You may take a different route. And right now, what's happened with the precious metals last year with silver and platinum leading most asset classes with like 140% gain in the year, and gold doing quite well also, that's the barometer telling us, watch out, choppy seas ahead. The real trigger point, Mark, is simply this. There's been enough printed money to have a hyperinflation 10 years ago. And here we are 10 years further on, it has not happened. It may never happen. So the trigger point isn't so much the monetary phenomena, which is overprinting the money supply, which is a cause. It's a psychological change. That's the key trigger point. When people wake up and say, this time when I go to the grocery store, I am going to buy more, whatever, because I know the next time I go, it's going to cost me more. When you get that kind of consciousness, that is the point where the velocity of money picks up. And people start spending money that just to get rid of it and get something tangible. And that's what happens in all these great inflations. Now, it really hasn't taken place in the United States. The velocity of money is still rather low. But I anticipate, based on what the metals are foreshadowing to us, that probably this year, 2026, we will see an acceleration in more people buying precious metals for safety and more people doing whatever they can, maybe draining their bank accounts to buy things of value because the currency is losing value at such a rapid pace.
How much of that recent spike in gold, silver, platinum is a flight to safety? Is it retail driven, institutional driven, or is it kind of more fundamental, like rejection of the U.S. dollars as the reserve currency?
Excellent question. It's a combination, but let me break it down. First of all, the retail silver investors are really out of the market. I mean, there's some that are still there. I'm still there. But many were really just worn out with the silver market doing, I coined a phrase years ago, silver will scare you out or wear you out. And many silver investors were worn out. It just hasn't done anything. And finally it gets to 35. It makes a breakout. Finally got into the 40s. And a lot of people that held it at 20 or 30 had a profit, said, I'm out, I'm tired of it, I wish I never bought it, I've made a profit or I broke even, and they've left the market. In the retail side, up until very, very recently, meaning like the last 4 weeks or so, 5 weeks, most retail silver investors have been net sellers, not buyers. Now, the flip side of that is institutions. And silver is primarily a industrial metal. It still has monetary purposes and serves a safe haven function like gold, but the main driver has been and will continue to be industrial use. And we have been in a deficit for 4 or 5 years. And the institutions and the industrial users have caught on to that fact. So what's happened is the Chinese markets primarily have taken over the physical demand for silver. They're buying block silver. The silver market's based on a derivative futures market, but the basis behind it is 1,000-ounce block of silver. And those bars are being bought hand over fist, and in many cases just stockpiled for future use in industrial applications such as Tesla Motors, Apple Computer, Samsung Electronics. all these companies require silver, and there is no substitute for it. So now that that physical demand has superseded the, let's say, the retail investor safe haven status or casual investor, it's taken command and driven the price from 50 to 80 in a matter of months, a few months. Gold, of course, is a little different story. I said that the run to gold has started, and I said that around the $2,000 level, and we're now at the $4,400 level. And the reason I said it with such confidence was just careful observation. Central banks were buying gold hand over fist, greater quantities than ever before in recorded history. And that continues to this day. So for the last 2+ years, central banks are buying gold, and they're buying gold, and they're primarily not having the same appetite for U.S. Treasuries that they used to, and I wouldn't say substituting, but adding to their gold positions. And I made the analogy that there's no fever like gold fever, and the run to gold at the end is a massive sprint. But the run to gold starts off with like a walk, a brisk walk, a light jog, a full jog, a light run, and then an all-out sprint. And so we're probably in the light run right now because the markets are accelerating, but we're not at the top yet when everybody's talking about their favorite gold stock or their favorite silver stock, or they just bought some silver candelabras and they're going to melt them down for the silver value. We're not there yet, but we're moving that direction. And it's unfortunate in a way, but it's just history repeating. There's never been a fiat system that hasn't failed. And to believe this one won't, I think is a bit naive. But failure does not necessarily mean it goes to zero. I do not believe the U.S. dollar will hit zero. I do believe that there will be a new system implemented that will probably use the name U.S. dollar, but it will be on probably a blockchain CBDC type of infrastructure where people use it electronically and probably cashless society. I think that's really the direction that's being pushed.
If something like that does happen and there is a new type of currency, where does gold and silver, where might they fit in that type of way going forward?
Yeah, that's a great question, and I wish I could look you now and say, Mark, it's going to be this, and I don't really know. What I do know is two things. They're both vital. One is gold, vital to all monetary systems that have failed in the past. So let me explain a little bit. The short, broad brush, very leaving a lot of details out view of monetary history is gold standard, great system, success, fairness, as it can be in the human experience. Go off the gold standard, go into fiat, fail, go back to the gold standard. Stay on the gold standard, have stability, prosperity, confidence. Go off the gold standard, go into fiat, fail, go back to gold standard. So obviously we go from fiat failure to gold over and over again. And again, that's a real broad brush view. This time, if we fail, will we go back to the gold standard? The answer is I don't think so, at least not initially. However, as I just said a moment ago, central banks are buying it hand over fist. I think it's their backup plan. I think it's plan B. Their plan A is to put the world on central bank digital currency, either private or public, either government or non-government, doesn't really matter. Stablecoin is basically a CBDC and it's outside of government control. And if that doesn't work, then I think what will happen is that there will be a change and it will be tied to gold at some level. It will not be a gold exchange standard where you could take your U.S. CBDC gold dollar and exchange it for gold. You'll just be told that there's, this many grams of gold behind every dollar that's in circulation. So that's one of the points. As far as silver is concerned, it's an absolute essential for high-tech society. It's imperative. It can't be substituted. So what will it do in the crossover? Since it really doesn't serve a monetary purpose like gold still does, I think it will just be repriced in the new system and probably somewhere on par with what it is now. In other words, it's been more or less suppressed for well over 50 years, and now it's basically in a free market price discovery moment that will probably take place for several more months. And depending on when the new system is implemented, I think it'll cross over probably at a much higher value than it was, let's say, a year and a half ago.
Because silver has that industrial utility, do you see more demand going forward for that versus something like gold?
Absolutely. If you go back 25 years when I started on the web, the amount of use for silver in industrial applications was 35% of the market. And 35%, that's over a third. I mean, it's a pretty big whack of metal coming out of the ground every year that's used. And we mined about 500 million ounces. So that's 150 million ounces round numbers. Today, it's about 70% of the market. So it's doubled in the last 25 years. And we mine 800 million ounces. So 7/8 is 56. That's 560 million ounces. If we went back to the year 2000, and let's, for thought experiment purposes, Mark said that all we ever got out of the ground from that point till now is 500 million ounces of silver. Not true. We've increased the production, but for a thought experiment, it stayed at 500 million. That would mean that industry would need more than the entire amount of silver mined every year. And we're getting close to that. If you take the amount of industrial use, jewelry, and silverware, we're pretty much using up all the silver that's mined and recycled every year. So the offsetter is the monetary demand, which averages about 200 million ounces per year. And that's roughly what the deficit has been the last 4 or 5 years. If the monetary demand accelerates, like gold has, and it seems to be happening in the East, remember I told you retail silver investors were net sellers, which is true, but that's mostly North America. In the Asian countries, it's the retail investors caught on to the silver story. So in Asia, Hong Kong, you've seen a lot of people buying silver for investment purposes. So it's a bit of a skewed market right now, but that's where it sits.
What's the process of mining silver? Is there an infinite amount that could be mined? Is it very resource labor intensive to mine? How does that compare to mining for gold?
Silver mine is a much rarer animal than a gold mine. First of all, there is no such thing as a pure silver mine anymore. There's one exception. There's a Morocco mine that's almost all silver. But almost all silver is mined as a byproduct of other mining activity. About 70% comes from other mining activity. 27% of the silver supply every year out of the ground comes from mining copper. 13% of the silver supply every year comes as a result of mining gold. And the other 30-something percent is a result of mining lead and zinc. And silver by itself, in a primary silver mine, you will be mining ore that will be like silver and copper, or silver and lead, silver and zinc, silver and tin sometimes, silver and gold. So there aren't many pure silver mines. And to further your question, the cost of mining silver is around $30 per ounce. And of course, we're now at 80. But for a very long time, we were at that $30 per ounce. So most of these miners were barely making a living, because in order to be a good mining facility, you need to have an excess. You need a margin. You need to have, $50 an ounce. So you've got that $20 margin. And, we're making $20. Well, you're making $20, but in that business, you've got to go re-explore other areas and do drilling and do assays and do geophysics and all these things that go into the mining industry to stay in business. Because the best gold mine or silver mine in the world ends in failure. Once you take that last ore, that last ounce of silver or gold out of the ground, you close the mine, it's done. You mined it out. So if you're going to stay in business, you've got to keep looking for new prospects and new opportunities to find gold or silver or tin or lead, whatever the mine is, that's economic. And there aren't many economic mines. Now that the prices have shifted so drastically in the last year, a lot of those maybe could be a mine, will be a mine, because obviously the prices have more than doubled. And that means that a mine that might have gotten silver out at, let's say, $35 an ounce, AISC, I'm not trying to talk over anyone's head, it's called the all-in sustaining cost. What's the all-in sustaining cost? What is it cost me to do everything to get out an ounce of gold or an ounce of silver? And that cost has got to be lower than what the price of the metal is, or else you're not going to be a viable business.
You mentioned that North Americans' retail side seems to be net sellers, whereas in the Far East they're more on the buying side. I'm starting to get more and more questions about precious metals, gold, silver. What's the practicality of a retail, or how does a retail investor invest in silver, right? They're hearing now they can go into Costco and buy bars, or do they, what's the difference then from buying into like a trust like SLV or GLD? What other options are there for a retail investor to invest in precious metals?
First of all, I'll make a pitch. I'm not a bullion dealer, so I'm not selling my own book, but I really believe, especially in the current conditions economically, that everyone that has the ability to be an investor should have some precious metals. And 10% is probably plenty for most people. So I've always taught to have the real metal first. I think you really want to start with physical gold or silver. Buy it at Costco. That's as good as anywhere. Or there's many dealers online. The banks don't sell it, obviously, but you can buy silver or gold fairly easy. And once that's established and you have, let's say, a bit of ready money, ready cash, then if you want to go to an ETF, you want to go into the mining stocks, you want to go into options or whatever, I don't recommend any of those things as a first stab at the investment class, but I'm not opposed, once you have physical, to go ahead and explore other areas. And the easiest way for most investors that have a stock account and don't want to bother with futures, which I would recommend most people don't get near the futures market, is through the ETFs. So you can buy the SLV, the PSLV. There's silver ETFs that do stocks, like the SILJ, which is a junior silver ETF. So there's lots of ways. Any stock investor could take 5 minutes on a search engine and find really a fairly wide amount of investments in gold and silver that they can use.
And that 10% that you're talking about, is that from like a diversification, from like an insurance perspective, or just opportunity for growth that you would like say?
It's more of a hedge than anything else. Long time ago, I was asked to write. The book doesn't exist anymore, but it was published for years and years out of the United Kingdom. It's called the Investing Rules Book. And in the Investing Rules Book, they took experts from all kinds of different fields. Mutual funds, limited partnerships, movie directors, dividend-paying stocks, options, everything. And I was asked to write the 10 rules of silver investing. And in those 10 rules, Rule 10 was too much of a good thing is too much of a good thing. 10% is correct for most portfolios. And the reason you own precious metals is because of times like these. I mean, really what you're doing is you're buying sound money. You're buying money when a currency crisis is ahead at some point. And this thing has been building ever since Nixon closed the gold window August 15th, 1971. So it's been, several decades. But here we are. Are we failing? Failing, as I said earlier, no. But we're kind of at the end of it. The bankers themselves are looking for a new system. Coming back on point, if everything goes down, real estate goes down, stocks go down, even the bond market goes down, the metals usually will be at the other end of the seesaw and balance you out. And to balance you out, really 10% is enough. Because if you look at like 1980 when gold went to 850, it started at like 42, it went up, 20-something fold. And so 10% would be more than enough because it'd be double. And that's assuming your real estate went to absolute zero, your stocks went to absolute zero, your bonds went down. None of that happened. They got hit hard. They went down very noticeably and would have hurt if that's the only positions you held. But if you only held a meager 10% in the precious metals, then that would have balanced out and actually kept you in a positive territory. So you don't have to overdo it. The one part of my business that gets misunderstood, I think, is that people hear the story, they resonate with it, they find that they can, be their own bank in a way, and they go all in or buy the wrong type of gold or do it all at once or buy too much. Because really my position has always been that every investor needs some but that doesn't mean it's your entire portfolio. And many people just overload, not knowing what they're doing or getting scared or based it on emotion rather than taking a cool, calm approach. And that's why when I was asked to write the 10 Rules of Silver Investing, I really wanted to emphasize that rule number 10, because you do not need to prevent yourself from getting into the high tech or real estate or whatever, the more traditional, more, let's say, well-recognized investment classes are. But just in case you got a little bit over here, just in case something takes place. And the other thing, it's so liquid. Let's say you're a real estate investor and you put your 10% in the metals, and all of a sudden something goes wrong with one of the houses. But if you got the cash to fix it up, you can get it on the rental market really quick. Whereas if you didn't have that excess cash, you might be sitting there waiting to build up your cash supply to be able to do a repair. I'm off in the weeds, Mike. You can bring me back, but that's the idea.
Talking about liquidity, if someone does goes the physical route and they buy, let's say, too much or whatever, they need to sell it, what is the process for selling a bar of gold or silver?
Yeah, there's nothing more liquid in the world than gold or silver. I mean, there's a coin shop in any town of any size, even pawn shops, which I wouldn't recommend, but usually you can liquidate gold and silver fairly easily, almost anywhere in North America and in most countries in the world. In fact, having an aircraft background I mentioned earlier, all the jet pilots have a survival pack. It's about this big, and there's stuff in that like a compass, a map, but there's a gold coin. They don't give you $100 bill with a Benjamin on it. They give you a gold coin. So if you bail out in Vietnam or Cambodia or France or Spain or Colombia, when you get yourself together, drink your water, and figure your way out of your predicament, that gold coin is good almost anywhere, and that's why they give you a gold coin as survival.
I mentioned in the intro that you were creating a documentary called Silver Sunrise. How did you decide to do that, and how has that been for you to do?
Great question. I've used a business coach on and off most of my career. I really think, two heads are better than one, but everything by committee I don't like either. So it's kind of that happy balance. And when I connected with this last coach, he asked me about writing another book, which I've written 3 books on investing. One's the primer on silver, one's the Bible on silver, the Silver Manifesto that you mentioned, and the last one's Second Chances. Is really an investing book on how to keep money, not take profits. Don't be afraid to take profits. And so anyway, came around, well, why don't you do a documentary? Oh my goodness, that sounds like a lot of work. But things fell into place. I met a lot of people on this path of mine. And all of a sudden, one of my newer acquaintances, but very loyal, said, hey, I know who you need to talk to get your film going. And he connected me with this James Yeager, who'd done 10 different documentaries. He did one called Fiat Empire, which is one of his first, got the Tully Award. It was pretty close to what I wanted to present. So I found the right people and started in. 2.5 years later, we put it up on the web for free. It's at silversunrise.tv. And it takes a more spiritual look at the money problem. The subtitle is Overcoming the Stress, Fear, and Control of Money. Because so many people, if you Google or use a search engine and ask what's one of the biggest stresses for humanity on the planet, you're going to find out that finance or money comes up like 70, 80% of the time. Now, there's divorces over money, there's lost jobs, there's a lot of stress around. And it really doesn't have to be that. And so that's what I explore in this document.
All right. Well, that's all the questions I have for you today, David. I want to thank you for being on the show. Before we go, where can listeners learn more about you and your ongoing work?
You can go to the main page, which is themorganreport.com. Get on the free newsletter list. It's at the bottom. You can sign up. You will get interviews like this that are public domain. Also do a weekly perspective, kind of a wrap-up of financial markets. Almost always mentioning the metals at the end of that. And it's a good way to stay informed in a, let's say, broad brush way that you can maybe get an alternative viewpoint of what's really going on. The main financial press is very much rah, rah, rah for the stock market. I love stocks. Started trading them at 16, like I said earlier. But in these circumstances, you need to take care of yourself. And in these conditions, you need to consider a wealth protection. We may, and I say may, get to a point where it's not so much how much you gain, it's how much you don't lose. If we do have a currency crisis where the dollar really gets hammered worse, which it may or may not, you could have something that will, let's say, anchor you into peace of mind.
Great. We'll include all that information in the resources section of the show notes. Thanks again, David, and thank you to everyone who tuned in today. Don't forget to follow the Agent of Wealth on the platform you listen from and leave us a review of the show. We're currently accepting new clients, and if you'd like to schedule a one-on-one consultation with our advisors, please do so at bautisfinancial.com/call.
Thank you for listening to the Agent of Wealth podcast. Click the subscribe button below to be notified when new episodes become available. The information covered represents the views and opinions of the guests and does not necessarily represent the views or opinions of Bautis Financial. The content has been made available for informational and educational purposes only and is not intended to be a substitute for professional financial planning and investment advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investments and financial planning.